guys, it's Arlicia, everyone's favorite mortgage broker. And we're going to talk today about the new FHA 2024 loan limits, as well as debunking some myths so that you can own a home this year. When it comes to an FHA mortgage, people think that an FHA mortgage is only for first-time home buyers or for buyers with bad credit. That is simply not true. And I'm going to show you how you can utilize this loan product to purchase a home this year in 2024. I believe home ownership is a surefire way to build wealth. I'm going to show you how you can utilize this program in order to build wealth. FHA allows flexibility for the consumer who's using that program. It's not for people with bad credit. I've literally had a doctor who was straight out of school who utilized an FHA mortgage because it made more sense financially for her to save a little bit on her interest rate, and we'll get into that, as well as have a higher debt to income ratio in order to qualify for the property that they were buying once they got out of school. FHA mortgages are not for first-time home buyers. You can have an FHA mortgage right now on a home, sell that home, and buy another home and use an FHA loan in order to purchase that property. There is no waiting period for FHA. It's a really big misconception. Let's say you own a home, you have an FHA mortgage on it, and you decide it's time to sell and upgrade. Well, you can buy another home with an FHA mortgage and still put 3.5% down. Debunk that myth right at the beginning. FHA mortgages allow for individuals to use their loan product to purchase a home with just a minimum credit score of 500. Now, if you go that low, you're putting down 10%, okay? If you want to do just 3.5% down, you need to have at least a 580 credit score. Anything under 580, you have to do 10% down, and we call that a manual underwrite, and it's a little bit more stringent, meaning we're looking to make sure that you have paid bills on time for the last 12 months. We're looking to make sure that you have paid your utilities on time for the last 12 months. There's a little bit more work involved when your credit score is under 580, but it's still an opportunity for you to be able to purchase. And some may say, well, if somebody's credit score is under 580 or 500, why would they buy? No matter where you live at, guess what? You want to build wealth. FHA, unlike conventional mortgages, allow you to put 3.5% down. Now, there are some loan products with conventional that allow you to do as little as 3% down, okay? But FHA allows you to do 3.5%. On a $200,000 home, that's $7,500. A lot of you guys get that back in a tax refund. You can utilize this program to build wealth. I remember when I bought my first home, my husband and I, we bought our first home. I think it was like $275,000. We sold that home for like $375,000. We did an FHA mortgage. We put the minimum down on that property, and we stayed there for a little bit over 2 years. And we were able to do what I like to tell people that you want to do when you own real estate, which is build wealth, right? And we use that equity that we made from that property to purchase our next home. The next home that we bought, we bought it with a conventional mortgage, but that first home that we bought that we thought we couldn't buy, FHA was the loan product to take to go with it. Loan limits vary with FHA mortgage. It depends on like your counties. I am licensed to do loans for FHA in the state of Florida, Georgia, Texas, New Jersey, and Colorado. I just pulled up some numbers in a few of those states. Now, when we talk about loan limits, I just want you to reminder that loan limits are the actual loan amount, which means that 3.5% above that, you can actually purchase that. In Dallas, the loan limit is $563,500. In Broward County, Florida, the loan limit is $621,000. In Sandy Springs, Georgia, the loan limit is $649,000. And then the loan limit in San Antonio, Texas is $571,000. Depending on your county, because loan limits are county specific, and I will link in my description a link to HUD so that you can actually plug in your state, your county to determine what your loan limit is. And then that will kind of help you gauge on how much money you need to buy if you plan on buying, obviously at the max. If not, then it really doesn't matter. FHA has mortgage insurance for loans who put 3.5% down. It is required for the life of the loan. For those who put 10% down, that period for mortgage insurance is shortened. Obviously, putting more money down on an FHA loan, you just want to think about how long you plan on keeping this mortgage, and it wants to be something that you financially look at to make sure it makes sense to do in the long term. One of the things that I love about an FHA mortgage is the debt to income requirements. FHA mortgages allow individuals to go as high as 47% on the front end and 57% on the back end, okay? It's actually like 46.99, but you get it. Let's give a scenario. You got a spouse who may be self-employed and we can't use their income to qualify, but the wife has a job. We can use her income to qualify. And I'm not saying you can't be self-employed and bond. I'm just saying maybe he hasn't filed his tax returns. Maybe they're paid under the table, whatever. Any other variable that will not allow us to use that income. And let's say you got a spouse and they have a job and they can use their income on their job and they can qualify to buy the home that they want to buy. But on conventional, their DTI or their debt to income ratio, meaning how much debt they have to how much income they have, is too tight. Well, in this instance, being able to have that flexibility to increase your debt to income ratio is crucial for you to be able to purchase. You may or may not want to go to the max on your budget. I always tell individuals it's super important that you come up with a monthly budget that you're comfortable paying every single month, and let that be the determining factor regardless of what the lender says you can afford to buy. Because we're not taking into consideration things like daycare, if you're eating out at Chick-fil-A every day or something, we're not taking into consideration things outside of the items that we see on your credit report for most loans. For VA loans, that's a little bit different. We do include, childcare as an expense. And so it's super important, even though you are able to purchase with a super high debt to income, that you take into consideration your actual bills. I normally tell people you want to have a budget. Write down everything that you're paying out of pocket. Write down your expenses. So when your mortgage professional asks you, what can you afford or what do you feel comfortable paying every month? You don't give them the answer of, I don't know. I always ask my clients, what is a comfortable number for you to pay every single month in a mortgage, no matter how much you love the home? And a lot of times they don't know the answer, or they'll say, well, I haven't really thought about it. I'll ask them what they pay for rent, which is one thing, and then I'll ask them what they're comfortable paying in a mortgage payment. Now, I've had scenarios where people will give me a number for rent and then they'll give me a number for their mortgage payment, and it's $700-800 more than, what they're paying for rent. And I ask them, is that a realistic goal for you to set for a mortgage payment? Would you be comfortable knowing all the other expenses that come along with owning a home? Okay. FHA mortgages are only for primary homes. Okay. You cannot use it for an investment property. And what do I mean by that? I mean, you have to live in the property. And that doesn't exclude multifamily properties. FHA mortgages are only for primary homes. They are not available for investment properties. And when I say investment, I mean properties that you're not going to reside in as a primary home. I'm not talking about multifamily properties that you may live in one unit and rent out the other units so that you can collect rental income and technically kind of call it an investment because you're structuring it a way to help you build wealth while you're in it. Now, one of the things I also want to mention is on an FHA mortgage, 99% of the time, the mortgage rate will be better than that of a conventional product. FHA has two things to consider when you are using their loan product. You have your mortgage rate and then you have mortgage insurance. Mortgage insurance on an FHA mortgage is a set standard. It doesn't matter what your credit score is. On a conventional product, the mortgage insurance can vary based on how much you're putting down and what your credit score is. So mortgage insurance on a conventional product can go up or down and may not be beneficial to take that route. Now, if you're comparing apples to apples, some may say always go conventional. Well, I beg to differ, okay? Because you want to look at the rate, what your mortgage insurance is on an FHA mortgage as well as a conventional product, especially if you are putting the minimum down like 3 to 5% on conventional to determine which one would be a better loan product for you. It is never cookie cutter when it comes to mortgages. It is never one, there's never a moment I feel like one should just say, I'm just going to go with this loan product, and that's it. Especially if you're not putting 20% down. If you're not doing 15 to 20% down, you want to make sure you look at your options to make sure you're making the best financial decision. So one of the things about FHA is that it does stress stable employment. Unlike conventional, which will allow for 1 year employment history, FHA requires a 2 year work history or 2 years of employment. And now those 2 years don't necessarily have to be consecutive, running for the past 24 months, but there must be a 2 year of stable income in order to be qualified. For instance, let's say you're back at work, you were out of work and now you're back at work for 6 months and you're looking to purchase. But prior to your gap, maybe you were out of work for a year and a half or so, but prior to that, you were working for at least 2 years, then you can still qualify and purchase using an FHA mortgage. That's some of the flexibility that you're able to buy with using FHA. On conventional, it can be a little bit more stricter on having employment gaps as well as not having a consistent 1 year of employment. I always advise clients, listen, consult with the lender. Let them look at your specific scenario. Let them look at your income, your credit, your debt, and determine what product they believe would be the best route for you, while also explaining those loan products to you so that you can make an informed decision as well. Anyway, if you like this information, don't forget to subscribe to my channel. See you next time.